Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome back to the Deep Dive. It is Monday, February 9th, 2026. And I have to be honest with you, if you are looking at your screens this morning, checking the charts, checking the news feeds, you might feel like reality is glitching a little bit.
It is definitely a morning where the dashboard is flashing red and green at the exact same time.
Right.
The signals aren't just mixed, they are actively fighting each other in a cage match.
Exactly.
Yeah.
Okay, let's unpack this immediately because the headline number is staggering. And it just doesn't match the mood at all. Bitcoin is trading right around, what, $71,000?
Yep, holding steady.
Institutional money is flowing in. We're seeing ETF inflows nearing $300 million. By all traditional metrics, this should be a party. Champagne corks should be popping, right?
They should be.
But then you look at the market sentiment index, the fear and greed score, and it is screaming extreme fear. It's at an 8 out of 100. That is terrifically low.
It's genuinely bizarre. To put that 8 in perspective for everyone, an 8 is typically what we see during a catastrophic crash.
Right, like an exchange collapse.
Exactly, or when the price drops 20% in a single afternoon. You almost never see single-digit fear scores when the asset is within striking distance of an all-time high.
Yeah.
It suggests a profound psychological disconnect.
Yeah.
The market's holding its value, but the people in the market are absolutely terrified.
So that's our mission today. We are going to decode this mixed signal. Why is the price pumping while the sentiment is just dumping? And to do that, we have to look at 3 massive pillars we've pulled from the sources.
Okay.
First, we have a literal perfect storm, winter storms in the U.S., wiping out mining power, and a fat finger error at an exchange that accidentally moved.
Right.
Well, economy's worth a Bitcoin.
That number is hard to even wrap your head around. And then we have the philosophical battle. We have news out of Turkey involving Tether that challenges the very idea of cryptocurrency being uncensorable.
And finally, and this is where it gets really sci-fi, we have the pivot to AI.
Huh.
We're talking about a chip with 4 trillion transistors unveiled in the UAE and a crypto exchange buying the domain AI.com.
It does feel that way.
It feels like we are living in the future, but everyone is too scared to enjoy it.
Well, usually when the sentiment is this disconnected from the price, there is a rational economic explanation hiding in the plumbing of the market. So let's start with that fear index.
Right. So let's look at the market pulse for today, Feb 9/10, 2026. Global crypto market cap is up over 2% to $2.84 trillion. Bitcoin is slightly down in the last 24 hours, but holding $71,000. Ethereum is over $2,100. And yet, extreme fear. What is driving this anxiety?
Well, there are 2 layers to this. One is structural, and one is, let's call it reputational.
Okay.
Structurally, if you look closely at the trading volumes, something is off. We're seeing inflows into the ETFs, yes, and we are seeing businesses buying crypto for their treasuries, about $4.08 billion worth.
But wait, that sounds bullish, though. Companies are putting it on their balance sheet. That's usually the signal for up only.
It sounds bullish, but look at the stablecoins. In a real organic bull run where retail traders and true believers are buying in, you see massive velocity in stablecoins like USDT and USDC.
You need that liquidity to grease the wheels.
You do. Think of stablecoins as the poker chips at the casino. If everyone is cashing in dollars for chips, the casino is busy.
Okay, I like that analogy. So are we seeing a lot of chips on the table?
We aren't. Right now, USDT volume is sitting at $86.3 billion. That might sound like a lot, but for a price level of $71,000, we should be seeing volumes closer to $130 or $150 billion.
Wow.
That is surprisingly low.
So the pipes are dry. The volume isn't matching the price action.
Exactly. And USDC volume is under $10 billion. This suggests that the price isn't being driven by a wave of new enthusiasm. It suggests that the institutional buying might be a short-term hedge.
Smart money just parking cash.
Right, not a rally. And that makes traders nervous because if that hedge is removed, there's no volume underneath to catch the price. It's what we call a hollow rally.
So it's a house of cards feeling. You look down and realize there's no floor.
Yeah.
And then you mentioned the reputational factor. We have to address the elephant in the room.
Yeah.
The sources mentioned the release of the Jeffrey Epstein list and some very specific, very unsettling rumors.
Yes. And look, we have to be careful to remain impartial here and stick to what the market is reacting to, as these are reports about historical associations.
Of course.
But the market reacts to narratives regardless of the timeline, and there are discussions circulating that Epstein may have been involved in the early funding stages of Bitcoin, specifically linked to MIT and developers like Gavin Andresen.
To be clear for you listening, Gavin Andresen hasn't been involved in Bitcoin development for a decade. This is ancient history in crypto years.
Correct. But in a market that relies so heavily on sentiment and the ethos of freedom money, any association with a figure like Epstein, even if it's decades old and indirect, it casts a shadow.
It stains the narrative.
It does. So you have traders who are looking at the price doing well, but they feel the ick. They fear a public relations backlash that could trigger regulation. That contributes significantly to that 8 out of 100 fear score.
It's the ick factor meeting the fear factor. Okay, so everyone is on edge. The liquidity is low, the vibes are bad. And when you are on edge, the last thing you want is for the physical infrastructure to start acting weird.
But of course it is.
Of course, because it's 2026. Let's talk about the storms.
This is a fascinating example of how the physical world dictates the digital world. We sometimes forget that the cloud and the blockchain are just servers in a warehouse somewhere.
Right.
We just saw the Bitcoin mining difficulty drop by 11.16%. That is a massive number. It's the largest drop since China banned mining back in 2021.
And this wasn't a ban, this was weather.
Right. Severe winter storms in the United States. When the grid gets stressed by cold weather, miners who consume massive amounts of electricity are often the first to curtail operations.
They have to shut down.
They have agreements with grid operators to shut down to save the power for homes and hospitals. Because so much mining is now concentrated in the U.S., when the U.S. freezes, the Bitcoin network slows down.
So the miners turn off their machines. The hash rate, the total computing power plummets. Now, in a centralized system, that would be a disaster.
It would be. The system would just crash or lag out. But this is where what you call the genius of Satoshi kicks in.
It really is the genius of the protocol.
The network is programmed to aim for a block of transactions every 10 minutes. That's the heartbeat. If there are fewer miners, it takes longer to find a block. The heartbeat slows down. So every 2016 blocks, which is roughly 2 weeks, the network asks, How are we doing?
It does a little performance review.
Exactly. And because the US miners went offline, the network realized, whoa, we are too slow, we are lagging. So it automatically slashed the difficulty of the mathematical puzzle by 11%. It made the work easier.
And what this means for you listening, maybe for someone running a rig in their basement, is that for the next 2 weeks until roughly February 20th, the miners who stayed online are going to have a field day.
Precisely. It is significantly easier and more profitable to mine Bitcoin right now. It's a temporary relief rally for the miners whose revenue had been dropping. It shows the resilience of the code.
The physical world broke, but the digital code adapted perfectly.
It's the system self-correcting.
But then we have the system.
Yeah.
Human erroring.
Yeah.
We have to talk about Bithumb. This story gave me anxiety just reading it. I felt physical pain for the person responsible.
The fat finger to end all fat fingers.
Bithumb, which is a massive exchange in South Korea, they meant to send out a small reward to users, a cash bonus. Like, thanks for being a loyal customer, here's $10.
Simple enough.
Instead, the system glitch swapped the currency. They didn't send cash, they sent Bitcoin.
They sent approximately 620,000 Bitcoin.
620,000 Bitcoin. That is roughly $44 billion. I mean, that's the GDP of a small European nation.
It's an unimaginable amount of money to misplace. It's larger than the reserves of many central banks, and the market reacted instantly.
Oh, I bet.
We saw a flash crash of about 17% on localized markets as algorithms reacted to this sudden, massive movement of funds.
Imagine checking your account and seeing you're a billionaire and then realizing, oh no, I'm in trouble.
And that is essentially what happened. Bithumb froze the accounts immediately. They have reportedly recovered 99.7% of the funds. But the damage to sentiment, that lingers.
We're sure?
It reminds everyone that while the Bitcoin blockchain is secure, it survived the winter storms perfectly. The centralized exchanges we use to trade it are fragile. They are run by humans who make coding errors.
It feeds right back into that fear index. You can't trust the weather, you can't trust the exchanges, and apparently you can't trust that your money is uncensorable either. This brings us to the Tether story out of Turkey.
This connects deeply to the philosophical debate at the heart of crypto. Tether, the issuer of USDT, the largest stablecoin in the world, assisted Turkish authorities. They froze $544 million linked to an illegal betting and money laundering ring.
Now, on the surface, most people would say good. This was money laundering. Catching criminals is good. But if you are a crypto purist, this is a nightmare, isn't it?
It is the centralization paradox. People flock to stablecoins because they want the speed of crypto with the stability of the dollar. But to have a digital dollar that interacts with the banking system, Tether must comply with law enforcement.
It has to.
They have now frozen over $3.4 billion across 1,800 investigations globally.
So when you hold Tether, you aren't holding a permissionless asset. You are holding a digital IOU from a company that has a pause button.
Exactly. If you hold Bitcoin in a private wallet, no one can freeze it. The network doesn't care who you are. It's neutral. But stablecoins are not Bitcoin. They are digital banking products wrapped in a crypto shell.
That's a good way to put it.
And this seizure in Turkey is a stark reminder. If you are using crypto to avoid censorship, you cannot use centralized stablecoins. You are trusting a CEO, not just code.
It really highlights the split in the ecosystem. There's crypto the technology and crypto the financial industry. One is wild and free. The other is basically a faster version of your bank.
And that distinction is getting even blurrier as we move into our final topic, because we are seeing a pivot that might swallow both of those categories whole, the convergence of crypto and AI.
This is the part that feels like we jumped 5 years into the future. Let's start with a branding move. Crypto.com, which we all know, they're everywhere, has launched a new domain. They bought AI.com.
This is Chris Marszalek, the CEO, making a very calculated bet. They aren't just squatting on the domain. They are launching autonomous AI agents.
Autonomous agents. That sounds cool, but what does it actually mean for a regular person? Is this just another chatbot?
No, and that's the key difference. A chatbot talks to you. An agent does things for you. Think of it as a digital butler, but one that actually has agency.
Okay.
These agents can handle your calendar, they can execute trades, they can book travel, and Crypto.com is claiming they can do this while keeping your data private.
So they are pivoting from just being a place to buy Bitcoin to being the interface for your AI life.
It's a recognition that the crypto brand is cooling off, see the fear index, but the AI brand is red hot. However, there is a functional reason too.
Which is?
If you have an AI agent doing work for you, buying things, booking flights, How does it pay for them? Does it use a credit card? Does it fill out a form with a CVV code?
Probably not. That sounds clunky.
Exactly. It uses programmable money, it uses crypto, but to power these agents, to run billions of them, you need hardware. And that brings us to the news out of the World Government Summit 2026 in Dubai.
This spec sheet is absolutely insane. The UAE, specifically a group called G42 in Abu Dhabi working with Cerebras Systems from the US, unveiled the world's largest AI chip. They're talking about a single wafer with 4 trillion transistors.
To put that in context, a standard high-end GPU from just a few years ago might have had 80 or 100 billion transistors. This is 40 times the density. It is a monster.
An engineering marvel. And they aren't just building a chip, they are building a factory.
Yes, the AI factory concept. This is a 5 gigawatt campus. For reference, a typical nuclear power plant might produce 1 gigawatt. They're building a 5 gigawatt facility to house these chips.
Wow.
It's so significant that President Donald Trump actually visited the site.
That is a massive amount of power. It's basically a city built just for silicon brains. And the goal?
They want to produce intelligence as a commodity. They are aiming to generate 100 trillion tokens of data daily. They view intelligence the way they used to view oil, as a resource to be refined and exported.
That is a profound shift. And they're even pushing this down to the student level. The sources mention a partnership between the UAE Ministry of Higher Education and Microsoft to give university students their own AI agents.
It's about workforce readiness. If the economy is shifting to an AI factory model, the workers need to know how to manage these agents. It's not just about learning to code anymore, it's about learning to direct synthetic intelligence.
So let's zoom out and try to synthesize this for everyone listening. Because if you just look at the price chart, you miss all of this. We are sitting here on February 9, 2026. The market is terrified, fear score of 8 because of old ghosts like Epstein and new glitches like Bithumb.
Right.
The plumbing is under stress from winter storms. But at the same time, we have nations building 5 gigawatt AI factories and crypto companies pivoting to become the operating system for autonomous agents.
We are in a messy transition period. The old crypto problems, scams, volatility, bad reputations are clashing with the new reality, which is that this technology is becoming the substrate for the global economy.
That's a great way to put it.
The mining network self-corrected, it worked. The AI infrastructure is being built at a scale we can barely comprehend. The fear is short-term, the build-out is long-term.
It's like we're distracted by the noise, the fear index, the fat figures, while the foundation is being poured right under our feet.
Precisely. And that leads to a really provocative thought to leave you with. There was a mention in our sources of a debate series, and the question they posed was, does AI need blockchain, or does blockchain need AI?
That is the question.
Think about those autonomous agents from AI.com, or the ones the UAE students are using. If I have a bot that needs to pay another bot for a service, maybe for data or for computing power, is that bot going to open a Wells Fargo account? Is it going to wait 3 days for a SWIFT transfer?
No way. It needs instant settlement.
Right, it needs programmable money. So while we obsess over the price of Bitcoin today, the real story might be that we are building the banking system for the non-human economy. The AI agents might not care about the fear and greed index. They just need a currency that works as fast as they do.
That is something to chew on. The robots might be the ultimate bull market. Stay curious, stay skeptical, and don't let the fear index keep you from seeing the bigger picture. We'll catch you on the next deep dive.